Okay, so we've just published a new report on US-China trade protectionism, and it's well known. The models show that it's a lose-lose proposition for the world economy, and including here in Asia. But we know that multinational companies are very nimble, and what we've done at Nomura is look into more depth to see whether there actually are potential beneficiaries at the more micro level, the company level, the industry level, and maybe even some small economies could potentially benefit from this trade protectionism if the US and China sustain their current tariff rates or if they increase them further. We look at two potential channels here. One is if US and China have higher tariffs, for companies in the US and China, they might decide to substitute their imports to other countries in Asia. The second channel we look at is faced with higher tariffs, companies, particularly in China, could choose to relocate production into other countries in Asia. So they're the two channels we look at, but it's a lot of work to get into the data to do this. And I'll hand it over to you, Sonal, to explain some of the analysis we've done.
So how do we go about identifying who the beneficiaries are? What we know is that US has imposed, on 3 rounds tariff on about $250 billion worth of Chinese imports, and China has retaliated on about $110 billion of US exports to China. We know that, it's actually quite detailed at 8-digit level. We know the specific products on which tariffs have been imposed. So we look at the specific tariff codes, identifying over 7,700 products on which tariffs have been imposed either by US or by China. And we essentially map them against the export basket of about 13 Asian countries. So essentially we are trying to identify the potential winners in Asia, either because of US tariffs on China or because of China's tariffs on the US.
Yeah, that's right. And so the first metric we developed is called the Nomura Import Substitution Index. And what we did with all the data that Sonal talked about was we compiled revealed comparative advantage indexes. And this basically assesses how specialized countries are in particular products vis-a-vis the rest of the world. So we calculated these revealed comparative advantage indexes plus 4 other criteria, and that came up with what we call the Nomura Import Substitution Index. And Sonal, which countries actually in Asia did we find benefit the most from this potential import substitution away from China and the US?
So the import substitution beneficiaries, this is something that plays out more in the short term. And when we looked at countries, what we find is that Malaysia actually emerges as the biggest beneficiary from the import substitution angle. But following Malaysia closely are Japan and Pakistan. Amongst the least beneficiaries within the region are actually Bangladesh and India. The other important analysis we've done in this report is, like Rob mentioned earlier, go into specific industries and specific products within each country that are going to benefit. So for instance, when it comes to import substitution in Malaysia, we find that the electronic integrated circuits, LNG, are some of the biggest sectoral beneficiaries. It's cotton yarn in Pakistan, and so on. For each country, we've identified the top baskets of products that are going to benefit because of the import substitution angle.
Exactly. That was the benefit of going into such a deep dive into the data.
That's right.
And as you'll hear later, our equity analysts have devised baskets of companies based on the analysis we've done that can benefit from this in Malaysia, for instance. Now, the second channel we looked at, as I mentioned, is the scope for companies in China to relocate production in Asia. And here we created the Nomura Production Relocation Index. It's based on the export similarities of the various Asian countries vis-a-vis China, but also we look at how attractive FDI is as a destination across the various Asian countries, and we have a Nomura scorecard for that, and we've looked at surveys as well. So what are the results, Sonal, from our Nomura Production Relocation Index?
So when it comes to production relocation, I mean, this is a benefit we are talking about from a more medium-term perspective. There's production relocation and also FDI potentially moving to these countries. So the biggest beneficiary in Asia amongst the 13 countries we look at actually is Vietnam. Either because of the export similarity or because of having a much better FDI scorecard, and that's also what the MNC survey suggests. But following again closely on the heels of Vietnam are Malaysia, Singapore and India as the biggest medium-term beneficiaries from this theme.
Yes. So just to conclude from the economics part, this US-China protectionism, the risk is it can escalate further. It is a lose-lose proposition for the world economy, but there are a lot of anecdotes out there that particular companies and even industries in countries can benefit with what we believe to be the first real deep dive going into the data to assess how right these anecdotes are. And what we find in terms of import substitution, Malaysia stands out as the biggest beneficiary. In terms of production relocation, it's Vietnam. And as you'll hear next, our equity analysts take on board what we've found to look at particular stocks that could benefit.